So this evening's presentation will be broken into three pieces. I'll be covering a little bit of general information about the ratification ballot. Stacy will be talking about the Director of the District Program Amendment. Jim Johnson will be talking about the private equity amendment. We'll have time for any questions that anyone may have right after each piece. And just so if you don't know who I am, I'm Kurt Gomolinsky. I'm the executive director of Tau Beta Pi. So I work full-time down in Knoxville, Tennessee at our headquarters office. And I am a graduate of Wayne State, Michigan Epsilon 2001. You're welcome. If you haven't already, I think most everybody has, you can rename yourself with your name and chapter. As I said earlier, the session is being recorded. Please keep your microphone muted until the question and answer session. But if you do have any questions during the session, you're welcome to put them in the chat and we will answer them as we see them. Just a note, if you're not already on the Tau Beta Pi Discord server, make sure to join that to keep up on what's going on with Tau Beta Pi. And make sure if you have any images on chapter activities to send them to our media email address so we can use them for social media, the event, the bulletin, etc. So let me introduce my co-presenters this evening. So Stacy Forkner has been the director of the district program since 2019. Prior to becoming the director of the district program, Stacy served as a District 8 director for 22 years. She was a member of our first district program planning committee. She's a member of the Wisconsin Alpha chapter, where she served as chapter president, and she graduated from the University of Wisconsin with her bachelor's degree in chemical engineering. And Stacy has spent most of her career at SC Johnson, and I always love to say a family company, and currently serves as their science and technology manager. Jim Johnson is the chair of our Trust Advisory Committee. He has been the TAC chair since 2019 and served as a member of the TAC prior to that since 1995. He served prior to that as an assistant District 6 director and also as the director of the district program. He served on the executive council for 2 four-year terms and served as the association president during his second term. Jim's a member of the North Carolina Alpha chapter, where he also served as his chapter's president. He graduated in NC State with his bachelor's degree in chemical engineering, and he worked as a chemical engineer at Nuclear Fuel Services and Eastman Chemical Company. So I would just want to thank Jim and Stacy for taking the time to be with us tonight to present a little bit about the Constitution amendments that are in front of the chapters right now. So just a little bit about what we're going to do. As I said, I'll be talking about the ratification ballot process. There'll be some time if anybody has questions. Then Stacy will present on the director of the district program. Jim will present on the private equity amendment. And at each point, if there are questions, we're happy to answer them. And then if there's any general Q&A at the end, that's fine as well. So a little bit about the process. So convention approved 2 amendments to the Constitution. We do encourage all chapter members to review the changes prior to voting. And officers, especially voting delegates who are at convention, are encouraged to present the changes to the members during a meeting. And all amendments that are approved by convention are also subject to chapter ratification. And approval requires 3/4 of the chapters to vote in favor. So if we had 200 chapters, 150 have to vote in favor to ratify that. Within a chapter, approval requires 3/4 of the active members to vote in favor. And chapters now are permitted to vote until June 1st, 2023. The Executive Council did extend that from April 1st. Chapters can conduct balloting electronically, and it's important to note that abstentions, because of the 3/4 requirement of active members, do count as no votes. You can conduct it at an in-person meeting. You can do it electronically. There are lots of different resources out there. As I mentioned, there's the due date there. It is a graded report for the chapters. And to reemphasize it, 3/4 of chapter members must participate in the vote for that favorable vote. And the Executive Council can vote for chapters that do not submit ballots or submit invalid ballots. All of these amendments were approved by the 2020, or both amendments were approved by the 2022 convention. The Committee on Constitution and Bylaws or the Committee on Financial Affairs approved them. The TAC supports the one amendment. Obviously, Stacy supports the other amendment. The Executive Council supports them, and as do I. The Google site does have a lot of resources. There is a detailed presentation on the proposed changes, which includes a number of details which I've included on there that chapter officers are welcome to familiarize yourself with, or even use are welcome to use that and share it with the members. The digital versions of the ballots are also out there. There's some basic information sheets, and the frequently asked questions are also available out there. So those are the things that I just wanted to touch on overall in the process. And Walden asked, does an amendment failing by abstention different from failing from no votes regarding proposing them again? Not necessarily. Anyone can propose an amendment to the Constitution. So if an amendment fails because of the number of no votes or abstentions, it's kind of the same thing. If their number of abstentions causes the chapter to vote no, we do look at that and see what the particular response was for that. And it is just an odd quirk of how our Constitution is written, because Robert's Rules does actually define abstaining as not voting. So it's not like you're supposed to actually vote abstain, but because we require a 3/4 vote of the actual membership, it just then makes anybody who doesn't vote a no vote, because you have to hit that 3/4 vote favorable. So that hopefully answers your question, Walden. And are there any other questions about the process overall? A failed amendment can be reproposed. Yes, an amendment can be, for example, I'll use the most famous or infamous example in Tau Beta Pi history. The amendment to admit women was introduced almost consistently at every convention for 30 years, and it took 30 years for it to pass. So yes, a failed amendment can be reproposed. Any other questions?
Can I ask a question? You talk about only the process, right?
Yes, I'll get in. Stacy and Jim will actually handle the guts of each proposal.
Okay. For the votes purposes, do you guys recommend leaving the vote as like a documentation, or is it fine that, it's like trusted, we don't need to leave any kind of audit trail or stuff like that?
I mean, a basic, if someone's typing in their, if you have a list of email addresses with people's names and you use a Google form and people respond that way, that generally is sufficient, to document who, that you've got a virtual paper trail of how each individual voted.
Okay, so we don't need to have the original, but basically just a summary of who will yes or no on each. Okay.
Yep. And the actual
Okay.
ballot itself just asks for, the total number of, yes, no's, abstains, and absentees.
Okay, thank you.
Okay, so I will move along to the next section, and Stacy will talk about the Director of the District Program amendment, if she unmutes.
I realized that as I started to talk. So good evening, everybody. I wanted to just take a few minutes to walk you through a little bit about the district program, and then specifically about the role of the director of the district program. So as you are probably aware, Tau Beta Pi does regionally and geographically divide chapters into different districts. So we currently have 16 districts that cover the continental US, along with Alaska. And within each of those districts, there are 2 or more district directors who lead and work with the chapters in those particular districts. And the number of district directors is based on the number of chapters that are within that particular regional area. So I think 2 is the minimum, and currently 4 is the maximum that we have within any particular district. And really the role of the district director is to provide guidance, support, and programming to those chapter officers, with the goal of really helping the chapter officer leaders to strengthen the operation of their chapters, to become better representations of Tau Beta Pi. So when we look at the director of the district program versus the district directors, it's a very simple distinction about the difference between these roles. So the district directors provide the guidance and programming and support to the chapters, and the director of the district program provides guidance, programming, and support to the district directors. So what that looks like in terms of things that I have done in the role in the last 3 years. And these are just examples of the types of things that would be conducted and finished in this particular role. When we had to deal with COVID back in 2020 as the world shut down, we pivoted into virtual district conference programming. So I led the change to be able to conduct virtual district conferences. I complete the instruction of new district directors through their new director training. I have created something called our district director exchange, where we meet on a monthly basis in order to exchange ideas and discussion across the districts. And then lastly, we are in the process right now of revamping our district directors resource website. So that's something that is a big endeavor and something that we're trying to chunk away at. One of the other roles that I play is just to ensure consistency across districts. So as Kurt mentioned before, prior to this role, I did serve as a district director for a very long time. And we saw that there were often differences in interpretation around policies and guidance. And so part of the role that I'm playing right now is just to ensure the consistency in how we interact with chapters, district conferences, to ensure that they are handled in a similar manner. And so this particular role has that unique advantage to be able to work with the directors across all the districts to do that. Just a slide regarding the Tau Beta Pi organizational structure. So you can see the red box around it, currently this role of the district program, and then there is this relationship with the district directors. This is a very similar structure to the Engineering Futures program, where the Director of Engineering Futures ultimately facilitates much of the training and much of the support for our Engineering Futures facilitators. But it does not mean, I am not the boss of them. That's not the intention. It's really around trying to coordinate and support. So the duties of this role have existed in various forms and names over the years as both volunteer and paid roles. Kurt mentioned that Jim, that's here on the call, held this role at one point in time, but it's existed for a very long time under a number of different names that are all listed here. So I'm not going to go through each of those, but the work is there to be done. And so right now we're back to the title of Director of the District Program that we're looking to instill and constitutionalize. So just a little bit of history over the recent period as we have looked at this role. Back in 2016, the director of the district program was brought back for a 3-year trial. In the course of that 3 years, there were 2 individuals that held the role due to some personal circumstances and situations. So in 2019, I was appointed into the role, and at that time, it was decided to go through a second 3-year trial because of the fact that the first 3 years there just was not a lot of continuity, and they didn't really know, based on the results of those 3 years, whether or not it was a role that we wanted to keep on a permanent basis. So I came into the role in 2019 and continued to do some of those things I mentioned previously. So last fall at the convention, the amendment was approved. And so essentially now, as Kurt previously mentioned, the ratification is in progress. And if it is ratified, then this would become a permanent role. And that is essentially, it would make it equal to the other program directors. So on that previous slide that showed the organization, you saw 5 different program directors, our director of alumni affairs, myself in the role of director of the district program, the director of engineering futures, the director of fellowships, and the director of rituals. And so at this point in time, those 4 other positions are permanent program director roles. And so if the ratification, or if the amendment is ratified, it will essentially create this role to be in all essence, just another district program chair.
Can I ask a question?
Sure.
Yeah.
And that was essentially the end of my presentation. So go ahead
Right.
and ask away.
Yeah, so before that, all the district directors answer to the executive council directly, all the, I don't know, dozens of district directors.
Yes. So prior to this role, they did have a relationship directly to the executive council. Previously, Kurt, can you go back to the slide that had some of the roles? For a number of years, the assistant secretary treasurer, which was a paid role at headquarters, was essentially that liaison. At different points, we've had that executive council liaison that works with the district directors or with the program itself. But yes, prior in the periods where there was not essentially a director of the district program role, all of the directors kind of, if you want to use the word, reported to, but we're accountable to the executive council.
Okay. And I guess for the district directors, what are some of the relationships between the district directors and alumni chapters? Because I'm from alumni chapter. I'm just curious, how does that help? Later.
Sure.
At the director.
So officially, all of the alumni chapters are part of the district program because, as I alluded to at the beginning, the district program is based on these different geographical areas. The reality, though, is that since the inception or reinception of the district, or the director of alumni affairs, a lot of those relationships have been more focused through that particular position. That role is currently held by Tricia Gomolinsky, and she and I have had several conversations about those roles of alumni chapters and how do we more formally essentially create a relationship with district directors for the alumni chapters. One of the policies that we currently have in play right now within the organization is that we assign 1 district director for every 6 chapters. But traditionally that has been based on student chapters. And so, or collegiate chapters. And so one of the things that we have talked about, whether or not when we are assigning district directors, whether we assign, if we consider our alumni chapters in those numbers, which would lead to an increase in district directors, but it would allow an opportunity for stronger relationships with our alumni chapters and take some of the onus off of Tricia, who's been doing a lot of that work. So
Okay.
a little bit more to come on that, but that's kind of the current situation.
Okay. Because we definitely wanted to get more involved with student chapters. However, I guess we'd love to see more a kind of involvement from district directors to bring us together in some way, so that we can hang out with each other's activities or support each other or just show up and kind of be like in the same district and show like our participation or membership. That's something I don't know if that's gonna if this vote is gonna help or make it more kind of maybe it's something down the road or make it more obvious focus.
No, I appreciate that feedback. We certainly recognize the benefit that alumni chapters bring to the collegiate chapters. I think some districts do better than others in terms of how they engage those alumni chapters and really try to bring them into the fold with the collegiate chapters. So point well taken. I appreciate just the feedback that you've provided, because that offers a little bit of insight and into the opportunity that we still have.
Oh, sure. Okay. Thank you for the answer. Got it.
Okay, are there any other questions?
So I think Jim is going to talk about the financials. I guess is that something I asked now, right? Can wait a little.
So what we'll do is, if there are no more questions for Stacy on the director of the district program, we'll move on to Jim's presentation on the private equity piece,
Okay.
and then we can do questions for that at that point.
Okay, thanks, Stacy.
Cool.
Excellent. Thanks, everyone.
All right, so we will move along to Jim's piece on private equity.
Okay, thank you, Kurt. The Trust Advisory Committee is responsible for the investment policies and procedures around the Tauber Pi Trust Fund. And the trust fund is a fund that is used to support many of the programs of Tauber Pi. This is a listing of some of the programs that receive support from the trust fund, the earnings from the trust fund. Our role as the Trust Advisory Committee is to try to maximize the earnings that we can get so that we can grow Tauber Pi and grow and maintain support for programs through inflationary periods like we're going through now. So go ahead to the next slide. We do, in cooperation with the Executive Council, we develop a spending policy out of the trust fund. For a long time, it's been about 5% of the 72-month rolling average of the market value of the trust fund. We've started having actually reducing that over the last few years due to the lower expected earnings from the stock market. So because of that, and because of our now ability to look at other investment or to be able to have access to other investments, the Trust Advisory Committee has recommended that we look at a private equity offering that our investment advisor, Vanguard Investment Advisory Service, has shown us. Give the next slide. The real reasons for considering private equity is that by putting a portion of our investment portfolio into private equity, we could raise our overall earnings by, in this slide, they're saying 85 basis points, but that's based on a 70-30 portfolio of equity to fixed income. Tawai Pi operates at a 90% equity, 10% fixed income ratio. So our expectation of increased earnings would be slightly higher than that we get, but the benefit is that private equity, because you're investing in things that are not part of the public markets, there is an opportunity for skill and higher investment returns due to scarcity of information. The issue with public markets is that everybody knows everything almost all at once. So there's very seldom now is there an advantage to getting information early, and in fact there are laws against getting information early for that. We switch slides now. So what is private equity in this? The private equity is investments in non-public markets, companies that are not listed on public markets. It consists of a bunch of things. You've got basically three big categories. One would be venture capital, which is these are examples of companies that have that are young companies that are going out for rapid growth. Facebook, Lyft, Pets.com are examples of those. And in our case, the private equity, the venture capital part of what we're looking at is probably 10 to 15% of the overall investment portfolio they're looking at. Growth equity is another example, which is the bigger part of where we look to be investing. And that's where you take minority stakes in established companies and help them grow if there's out of stagnation. So examples of that would be Kind and Ducati, which is another example of companies that have fallen into that category. And finally, the buyout category, where you take majority stakes in mature companies with potential for selling at a premium after improving the operations, the governance, or paring the operation down. And examples of those would be Staples, Dell, Thomson Reuters are companies that have done that. So those are the types of investments that we'll be listed in. Our method for doing this is investing in a private equity fund of funds. So we're actually, as all of our equity investments are, we're investing in what amounts to a mutual fund, although it's not a mutual fund because it's not publicly listed. So that's the reason it's not called that. We switch. This is a comparison chart of what private equity has done over the last 20 years versus what the world equity market has done. For that, the light cyan bars are the earnings of the world Morgan Stanley all capital world index versus the model investment portfolio from the private equity fund that we're looking at and investing in. As you can see, it's consistently outperformed the stock market. Now, that said, this is past performance is not an indication of future results, and I will say that carefully because we're not guaranteeing that part. But that's we believe that the way we're investing in it, by spreading the risk among thousands of investments, as opposed to investing in 2 or 3 things, we can achieve greater results than by using the leverage of Vanguard and their capitals capital basis, we can get access to the best venture or the best private equity managers in the market. So that's where we believe we're in the right spot and are talking to the right people for this. And that's why we're asking the association to allow us to add this to our portfolio. For that, what we would plan to do is ultimately invest at our current market value. We would invest about $7 million in private equity, and we would do that in stages, starting hopefully this year. We would start with about an $800,000 investment, and then add to that in 2023 and add in 2024, and keep adding a little chunk each year until we get up to the $7 million ish investment in the portfolio. And then we would let that stand at that same percentage and maintain it at that percentage of the total investment. So it would go up a little bit each year as our overall trust fund value increased. But what would happen is you would have pieces from each year, which means you're getting, each year has a piece that's investing in, a few hundred investments, and probably 40 or 50 investment managers each year that you're getting. And you may get the same managers year over year. You may get different managers year over year, but it spreads our risk both broadly and where we're not having all our investments in one place. So that's the method that we plan to use. This chart shows what's called the standard J curve for private equity, which is about how most of the systems work. For the first few years, you're putting money into the investment. We would commit to, say, for the first year, we would commit to an $800,000 investment that we would actually give them the $800,000 over the course of the first 2 or 3 years. So we wouldn't give it all to them the first year. And then as that begins to start paying back, then we would be getting more money out than we had put in at the end of the day. And then after 10 years, they start what they call a sell-off of the investment vintage. And that's where they try to take all the profits that they have gotten from that and actually turn that into cash for that. So that's kind of how it works. HarborVest is the company that we're working with. This is Vanguard's approach to how they found HarborVest. They started by interviewing the top 200 firms, and they narrowed it down slowly to where they landed with HarborVest as the one that they were going to represent for that. So I think that's all that I really plan to present today for that. So are there any questions or that I can answer?
Well, I hope so.
Okay, I'll give it a try.
So to start off, the plots of the returns on investment. So essentially what we're doing is we're putting in money into this, and over a period of, I believe it was like 10 years is essentially the predicted involvement of this investment. That seems to be a fairly long-term procedure. The projections, and a lot of these graphs are models that seem to have been obtained from HarborVest. What are the predictions for the markets over that time? I know it's going down for a few years prediction. Is expected to be the long-term prediction?
The long-term 10-year projection for the public equity markets that we've seen from Vanguard are in the 4 to 6% range for the next 10 years is what they're showing. And that's coming off of the behavior we've seen for the previous 10 years of in the 8 to 12 range for each year. So they are predicting a downturn and a sustained downturn for the public equity markets. They've been predicting it for at least the last 4 years, but it looks like it's actually happening now. So, but they do expect this to be a long-term downturn, but still, equity is going to be better than fixed income. It's the way capitalism works.
All right.
For the
I don't know if that answered your question, but I hope it did.
Yeah.
Can I ask a question? So about the projection on the slide, I think there is a convention discussion of mutual fund return rate and the private equity return relative to that. So you mentioned a 4.5% need for usage. That's the return you require to fund the operation of Top of the Pie. With the current US Treasury yield rate, if you buy a long-term bond, would that satisfy already almost? Or I guess I also wanted to ask, like, the rate that's being introduced or told us on the presentation, are these including fees, inclusive of fees, or are these just gross returns?
We do everything. We do all of our math and projections of everything as net of all fees.
Okay.
Getting to your first question, the problem with buying a long-term bond, so you could buy a long-term bond now for like 5%, 5.5%, I think is about where that's coming in today. The problem with that is we're looking at 5.5% inflation. So if our goal is to fund Top of the Pie programs at their current levels, not their current dollar value, but the current activity level, then we've got to feed inflation into that. So to fund Top of the Pie, we've got to be able to earn the inflation rate plus the 4.5% we're taking out of it.
So we need to be earning 9% or 10%.
Yes. In today's world now, everybody, including me, hope that inflation doesn't stay at 5 to 6%. But where we are today, that would, in order to maintain that, we would have to earn that much to keep up with inflation and to continue to fund Top of the Pie stuff. And that's one of the reasons why we look at the funding rate as a long-term average over the last 20 months. So you don't make big shifts in your spending rate or in your program activities because of short-term functions that happen in the markets.
Did the forecast they provide include a projection or such a rate increase at the rate that we experience today? The return rate that's shown on the projection by HarborVest.
In those, in their projections, they have shown inflation dropping off next year to normal rates of 2 to 3%.
Okay.
But they showed that last year too. So.
Yeah, because inflation,
forecasting the market is a dangerous thing to do, and I kid them all the time when they start talking to me about things. And so, you predicted this the last 3 years, and occasionally it comes true if you keep saying it. So,
Right.
They're making conservative assumptions and trying to be conservative about what they're doing, and we're doing the same thing.
So,
Uh,
are the predictions? I'm not sure if there are any other companies that we've looked at that have similar predictions. Is the challenges with predicting the market similar across the board, or do we not know?
We do know, we got on the mailing list of, in 2021, we searched for a new investment advisor. So we went and talked to about 25 different investment companies, some of the biggest in the industry, and some smaller shops. And that's when we picked Vanguard as to be our investment advisor. But in the course of doing that, I got on the mailing list of all these other companies that all send me their 10-year projections of the markets, and they're all very similar. I mean, they're all looking at the same data sets, and they're all coming up with pretty much the same conclusions. There's some nuances in them, but it's there's not enough difference to, that you're not looking at a precise model of economics.
Right.
When we do the projection of 4.5% of the 84 months rolling average, the fund, that's the required or the necessary return of the entire trust money. I'm just curious, does that also factor into the interest rate changes, or is that just the relative performance?
That's what we believe. That's what we believe we can sustain as a spending rate and still keep up with inflation.
Okay, so that's factoring the inflation as of the convention, basically, last year. Okay.
So the 4.5% is what we think is a sustainable withdrawal rate, and we will have an inflation protected corpus of the trust fund in perpetuity, because our goal is not to have a 10-year trust fund. Our goal is to have a trust fund that lasts forever. So.
Okay, so given that the interest rate has risen this year and over the last past half year, I guess this number has to increase, right? I guess if you have an estimate, maybe that would be 6%, 7%. Is that accurate, or do you have a number?
The way that you increase the actual dollars that you draw out is that you build up the market value of the trust. So you keep the percentage the same, but the market value of the trust keeps going up. So you get inflation protected money out by growing the market value at or above the inflation rate.
Okay, so what you're saying is, as long as we grow the money by inflation rate, we should be fine. Is that accurate? Say that?
Yes.
Okay, thank you.
And with private, so we're looking at adding private equity as an option for the trust advisory committee to invest in. Are there any other potential investment strategies that could at least come close to giving us the returns that we need to operate without having to invest in private equity?
There are lots of different things we could invest in that we don't now invest in. And our investments are limited by what's in the Constitution bylaws. So that's why we're asking to add private equity as a potential investment. But there are lots of other markets, like the metals futures markets. We can invest in crop futures. We could invest in Bitcoins. If you got a new tech chairman. So there's lots of other things to invest in that we don't do right now, and we're frankly not comfortable doing those things because those markets are quite a bit more volatile than the public markets the public equity markets that we're in right now, and we're searching for not only higher earnings, but we're searching for low volatility, and we're finding both of those things in the private equity market. Private equity market has a fairly low volatility compared to the public equity markets. And so we expect that to help ballast the investments we have and help reduce some
Got
of
it.
our variability.
I see. It's yeah, my big concern with private equity is especially one of the points that was brought up during convention is that we don't really know how it's being invested until a considerable time after we've given them the money to invest in companies. And so the lack of like being able to see where the money is going, it feels it makes me uncomfortable. And it also feels that it's with private equity, I know a large chunk of that plot that it showed was buyouts and things like that. That tends not to be associated with good things, at least in the past. And so it feels concerning to be associating with investment practices that are suspect, I guess would be the way to put it. Public equity is pretty safe, although it's widely accepted and tends not to be considered a bad thing. But private equity has a little bit more of a black box, and it seems a little bit shadier to me. I was wondering if perhaps you could speak a little bit more about the ethical considerations involved with this investment practice.
Well, I can tell you that both Vanguard, our investment advisory firm, and HarborVest all have strong equity position or strong positions on being ethical in their investment practices. There are realities of investing that particularly if you talk about company buyouts happen for companies that are on the death spiral, basically, is where they end up. And generally you find that you save parts of the company at the very least, if not all of the company. The ones that sound bad is we had a buyout and they laid everybody off. Well, yeah, but they were probably all going to lose their job later on. That's when the company went out of business for that. So,
Right.
That's
Mm.
kind of both sides of that story. Now, like I said, you can find sad stories about anything. If you
Right.
look, and you can find exciting stories about everything if you look hard enough. So it's a mixture of those two. And we're not talking about one or two buyouts. We're talking about we're working with people that are going to make hundreds or hundreds of investments in different companies, and we're going to take a small piece of that.
Right. My concern is that the ethics of Tabe to Pi and the ethics of an investment company are working from, at least hopefully, two different ethical standards. We're trying to uphold, the best in engineering and to be, sort of the pillar of light in engineering, whereas they're trying to make ethical responsibilities such as not misleading their investors and to, abide by ethical investing practices, which may not be of the same moral code that we follow. And so their commitment to ethics and our commitment to ethics might be a little bit different. And then also the fact that when their objective is to make as much money as possible. So when they're doing these buyouts, my concern is, yes, the companies are going under, the people are going to lose their jobs anyway. Their goal is to come in and turn around the business in essentially as short a time as possible and sell it for the greatest profit. Their ethics might say that they're not, just selling a shell that looks good. It's actually still a functional company. But within that, it's how are their practices to support workers and things? I mean, we have issues like with Amazon not being terribly kind to their workers and making a sustainable employment opportunity. And sure, it's very profitable, but is it very ethical to be working their workers into the ground? It's like you can make a business more profitable by doing that and then resell it for more. And but does that really align with the ethics of Tabe to Pi to do something like that? Can we guarantee that if it doesn't, that HarborVest won't do that? it seems like it's a morally gray area.
I can't make that promise to you, but I can tell you that they do have those levels of concerns in the way that they operate. Now, you know, do they make every business decision on the side of the employees that used to work there? No, they probably don't. And they probably shouldn't. I mean, their loyalty is to us. The employees that work at a company's goal is to make the most money for the company, not necessarily the most money for them.
Right.
And I don't see the moral difference between those two things.
Yeah, I would have loved to have been able to have a conversation about how the ethical considerations of this investment practice aligns with the ethics of Ta Beta Pi. Although that was unfortunately not able to make it to the floor, though I tried.
Well, I would urge you to go to Harbor Vest website and look up their ethical practices and find out for yourself how they say they operate.
I skimmed it a little bit, and most of their ethics are what you would expect from a financial company as regard to their contract with the people that are investing with them, and not focused on how they're investing and with the ethical considerations of the companies that they're using to generate those returns. Because ultimately their client is the investor, not the companies that they're using to make those returns. So it makes sense that they don't have a whole lot for that. It's just a
I think
concern.
I think what maybe Warren is saying that while there's ethical practices, it's not all captured of what they're doing in terms of how they turn around a brand and get a cash out of it, and then leave. And in the end, it would be just a cash generating business, but it will be for society, it'll be worse off for the customers and the investors. Because if you just,
Exactly.
I think
let me ask the question this way then. In your example, is it wrong? Would it be wrong for Ta Beta Pi to be invest in Amazon?
That's the question. Is it good to invest in companies that support practices that are not sustainable? Does that align with the values of Ta Beta Pi? I mean, we have ethical considerations that don't exactly align, that don't exactly cover that. I mean, ours is to things like have the same opinion for buyer and seller, and to be honest in our dealings, and to maintain neutral points. That doesn't exactly include, do we do what's best for society? We don't exactly have that stipulation in any of our rituals or oath. So in my personal life, it seems a little bit, it makes me uncomfortable to do something like that, and it doesn't align with my values. And so my hope was during convention to sort of pitch it in the light of, do the morals of Ta Beta Pi allow for this potentially less than sterling investment practice? And if so, then this is fine and should be gone through with. But we didn't really get to have that discussion, which was why I was hoping that potentially at this upcoming convention that it could be brought to the table again and discussed in further detail how the ethics of this, and just to sort of be aware as an association that this is what we're doing. Like, this is where our money could be going. This is what could be happening. And this is what we're going to have to be okay with to take these risks in order to make sure that, and to look at how, okay, this is how we have to make money to survive. Does the harm that this investment practice might be doing get offset by the good that we are doing with that money? And do we as an organization accept these risks clearly and plainly? Or are we just sort of sweeping it under the rug and sort of trying not to look directly at the question of, does this align with our values? it would have been nice to have covered that, and there isn't a lot we can do now. I guess that's kind of my justification for how I ended up voting, and how a lot of the my chapter members voted, was more in hopes of revisiting this question at our next convention, and not that this should be outright not accepted. And so that's just my sort of thoughts on the matter, is that perhaps that should be a point of discussion instead of just the financial side of things, to look at more the moral side of things too, so that we don't, end up with another situation like the women's badge. It seems like a good idea at first, but when you actually look at it, it's pretty morally questionable. Going back to that example. Anyway,
Yeah.
thank you for your time.
Thank you for your time.
All right.
Daisy
Thank
and
you.
Jim.
Thank you, Chris and Walden, for your questions. We are at 9 o'clock, so we do need to wrap up and move on. I just wanted to quickly note that we will be doing another session with Jim and Stacy next Thursday at 8:30 p.m. So if there's anyone else that that should attend, please encourage them to do so. And we have recorded this session. We'll post it online. And then next month, we return to the regular chapter development committee programming for lessons learned from the year. So thank you, Jim. Thank you, Stacy. Thank you, Chris and Walden, for being on tonight. Appreciate it.
Thank you.
Thank you all so much.
Thank you.
Good
Can I
night.
invite members to join this as well next time?
Oh,
Or just for
absolutely.
the officers?
Yeah, if any member of
Any
Talbot
member,
is
okay.
welcome to come to this.
Okay, thank you.
Absolutely. All right. Have a good night, everyone.
Good night. Bye-bye.
Yeah, you too. Thank you so
Bye.
much.
Thanks for your time.